Yes, dear students, today we are going to see financial statements. This topic is meant for students of grade 11. It is very important to understand this topic properly because financial statement is a basis on which all topics will be based. So, if you don't know this topic properly, financial statement, then it will become difficult to master the topic that will come afterwards, like partnership business and so on. So, what we mean when we say financial statements? Formerly, financial statements was known as final accounts. Today, we call it financial statements. Financial statement consists of income statement and statement of financial position. So, first of all, let us see what we mean when we say financial income statement. So, income statement, the first part in the income statement, we are going to calculate gross profit. And in the second part, we are going to calculate profit or loss for the year. So what are the items that we will have to record in an income statement? We have to record purchases, opening inventory, closing inventory, carriage in rates, carried out rates, wages and salaries, discount received, discount allowed. So all these items will have to be recorded in an income statement. Some of the items will be recorded in the first part of the income statement where we are going to calculate gross profit. And other items will be recorded in the second part of the income statement where we will calculate profit or loss for the year. So, the first part of the income statement, we will calculate gross profit or gross loss. Later on, we will come with a format of income statement where we have to calculate gross profit and profit and loss for the year. Now, what is the purpose of preparing an income statement is to calculate gross profit or gross loss. So what are the information that we will obtain when preparing income statement? One, we will obtain cost of sales, gross profit, and net sales revenue. And for income statement 2, where we are going to record expenses and income, the difference will give us profit or loss for the year. Now, in general, you will be given a trial balance, and from the trial balance, you will be required to prepare your income statement and statement of financial position. So, what you have to bear in mind, dear students, all items which are found inside the trial balance should be recorded only once. That is, either they will be recorded in the income statement or in the statement of financial position. So all items which are inside the trial balance should have only one entry. So what you have to bear in mind. Now, and you will be given additional information. There are many additional information that will be given to you, and all additional information, what we call adjustment, all the adjustment will have to be recorded at least twice. As we record one entry in the income statement and the other one in the statement of financial position. So you have to be very careful when dealing with adjustment. You have to ensure that adjustment have been recorded at least twice in the income statement and the statement of financial position. So now we are going to see some of the items which are found in the adjustment and how we will record them. We will see it in terms of theory, then we will go to see it practically by using whiteboard. Now, you are given additional information like closing inventory. So what the double entry, how do we record closing inventory in this income statement? So closing inventory will be recorded on the first part of the income statement where we are going to calculate gross profit, and then closing inventory will be recorded and the current asset in the statement of financial position. And then we have adjustment number 2, drawings of goods. Drawings means anything that we take out from the business for personal use. for family use, for private use, what we call drawings, anything that we take out from the business, drawings of goods. So drawings of goods will reduce purchases, so we will record it in the income statement 1, we will deduct from purchases, and then we will record it in the statement of financial position, where we have capital at net profit less drawings. Expenses prepaid. This one we have to deduct from the expenses in the income statement, and then we record it and the current assets in the statement of financial position. Prepaid expenses we have to deduct because of the accrual concept. That is a matching concept. That is, we have to record expenses which relate for the accounting period. Any prepaid we have to deduct, which does not relate for the financial year. Expenses due, or what we call expenses owing. This one we have to add in the income statement with expenses, and then we have to record it and the current liabilities in the statement of financial position. Depreciation on non-current assets. This one we have to calculate the depreciation and then record it in the income statement and the expenses, and then we have to record the depreciation in the statement of financial position. That is where we have to record costs less net depreciation, then we get net book value of assets. So we have to record it there in the statement of financial position. Create provision for bad debts. Provision for bad debt is being created for the first time. Therefore, we have to record it on the debit side of the income statement. That is, and the expenses, and then we have to deduct it from trade receivable in the current assets. Provision for bad debts. If we have provision for bad debts in the trial balance and we have to calculate provision for bad debts and in the adjustment, so only the difference will be recorded in the income statement. If there is an increase in provision for bad debts, therefore we will record it in the expenses, and then we have to deduct from trade receivable in the current assets. If there is a decrease in provision for bad debts, then we have to add it with gross profit and the income, and then we have to deduct from trade receivable in the statement of financial position. Credit sales not recorded. At times, some credit sales were not recorded in the statement of financial position. So in this case, we have to add it with sales revenue, and then we record it under current assets in the statement of financial position. Credit purchases. At times, credit purchases also were not recorded in the statement of financial position. So we add with purchases in the income statement, and then we record under current liabilities credit purchases. So rent paid per annum 6,000 was paid up to 31 Mars 2020. We assume that the accounting period ends 31 Décembre 2019. So we have paid up to 31 Mars 2020, so rent prepaid. So in this case, we say rent per annum, we have to divide by 12. Rent prepaid is equal to 6,000 divisé par 12 multiplied by 3 months. This will give us $1,500. So $1,500 will be prepaid, and we'll deduct it from the 6,000 in the income statement. And then $1,500 we have to record and the current assets in the statement of financial position. Wages 12,000 per annum was paid up to 31 août 2019. So in this case, wages due. So we have to calculate 12,000 divisé par 12 multiplié par 4 months. August, September, October, November, December, 4 months due, and we get 4,000 wages due. So we have to add it in the income statement, and then we record under current liabilities in the statement of financial position. Now we are going to see it in a question, practical, how we have to deal with these adjustments. Thank you very much for your attention.